Hello everyone, welcome to the IchimokuCharts.com daily analysis for the Euro US dollar for Wednesday, March the 7th, 2012. Well, a continuation of the trend to the downside today, and a candle that's made a lower high and a lower low, but a white body candle, and the white body denotes the buyers making net bullish progress, as opposed to the sellers who made a large amount of net bearish progress on the previous day. We had the market finding support at the top of the cloud, and this highlights how important the cloud is as an area of support or resistance with Ichimoku trading. And here we see the sellers losing commitment at the top of the cloud and some buying activity coming into the market. We also have support within the cloud at 130.79. And the market today found resistance at the 131.45 area that we've highlighted previously. So there is a potential for a change of trend. We have had the buyers take control of this market for the trading day, and they've shown some strong commitment, although they did lose commitment as they traded just up above the 131.45 area. If we do see a change of trend, to look to the 131.96, 132 region as an area of potentially strong resistance for this market, and then certainly up above there at the Kijun Sen, which is trading at 132.29 as an area of strong resistance. Now, in terms of Ichimoku, the market is bullish in the long-term time frame by trading above the cloud, but bearish in the medium-term and fast-term time frames by trading below the Kijun Sen and the Tenkan Sen. And the Kijun Sen is pointing flat, and we've seen the price action begin to be attracted back towards that flat Kijun Sen. So there is a possibility that we could see this market rally and change trend and trade up towards the flat Kijun Sen. But as I've mentioned, we do have strong barriers at 131.45 and 131.96 for the market trading up to that level. If we do trade above there, we have resistance at 132.90 at the Tenkan Sen, then above there at this swing high at 133.20. So in big picture terms, a bullish market, but in the medium term and fast term time frame, a bearish market. We're getting mixed signals, but very strong support below, but decent resistance overhead. Next, moving to the Aussie dollar, US dollar, and here we see a market that's still trending down. A candle that's made a lower high and a lower low, and in this case a white body candle as opposed to the black body candle of the previous day. So the buyers have made net bullish progress as opposed to the previous 3 days, so this could be significant for this market. We do have a largish shadow on the bottom of this candle, and that coincides with the market testing roughly down to around the 105 level, which is holding as support on this occasion, and roughly around that area 105.24 for the previous days, trading the market traded down to that area, and we saw buyers coming in. The sellers lost commitment down around this area, so that becomes quite an important area for the market for tomorrow's trading. If we are to trade down through there, we could see lower levels, but we do have the cloud close by, and if the trend does continue down, we should see solid support down around the 104.70 level roughly, and that support extends all the way down through to about 102, so very, very solid support down below. Now, the market attempted to rally up to the 106 level today, but that's held as strong resistance. We've highlighted that area previously as an area of resistance for this market. So if we are going to see the trend change because of the buyers taking control for today's trading, we will need to see them trade up through that level if we are to see the market test higher levels. If we do see a bullish close up above the 106, or bullish activity up above there throughout the trading day, we could easily be trading up to 106.81 and then perhaps up to 107. Above there we have very strong resistance up to 107.52 and 108.43. We have seen the breakout down below the barrier of this congestion area, a very large volatile congestion area, which, as I've mentioned previously, is quite often a sign of a major top, and there is a possibility we could see the trend continue down, so we do need to watch the low of the current candle for a potential test to lower levels. But as I've mentioned, if we do see the market test lower, then we do have very solid support offered by the cloud over the next trading day. So a market where we could have a potential change of trend, resistance at 106 but solid support down below. Next on to the US dollar Japanese yen, and here with this market we also see a similar type of candle that we're seeing with the Aussie dollar and with the euro. We have at the end of this downtrend, after some strong bearishness in the market, we see a white body candle, and that does set this market up for a potential change of trend to the upside. We can also see the long shadows on the bottom of these two candles together here, and that represents the sellers losing commitment as they were trading down around the 80.5 level, actually to 80.57. So that will act as very strong support for this market for tomorrow's trading. The buyers have taken this control of this market today, and they've shown some decent commitment to taking this market higher, although just looking at the top of the body of the candle, we do have a smallish shadow, and that represents the buyers losing commitment as they were trading in that area. And we know that this yellow area that I've highlighted is an area of strong resistance, a very large zone of resistance, and we've seen the market sell off on 2 occasions. So there is a possibility that that could hold as resistance for today's trading. Having said that, however, this once again is a Japanese candlestick reversal pattern, or a potential reversal pattern. We have the downtrend in place, and here we have the two lows adjacent to each other, and that is a tweezers bottom pattern, as opposed to the tweezers top pattern that we had a couple of trading periods ago. And this market, even though we have a trend of really only one day, the market has come off enough for us to call that a decent trend to correct. So there is a strong possibility that we could see the market trade up through the high of the current candle and test to higher levels. So we do need to watch the high of the current candle for confirmation of that uptrend, and for the market making a higher high and higher low, which would be confirmation. And we could see the market easily trading up to the 81.85 level around these highs. We do have a barrier here around the 81.60 level, 67 level from this previous swing high, so that could be important as well. But just looking big picture, we do see the market making a series of higher peaks and higher troughs, and this here is a minor trough for potentially in this scenario of higher peaks and higher troughs, and we do have potential to trade higher and take out this peak to continue that series on its way with this strong second time frame uptrend. In terms of Ichimoku, the market's bullish in all 3 time frames. We're trading above the cloud, above the Kijun-sen, and above the Tenkan-sen. And the Kijun-sen was pointing flat. Market price action was attracted back towards there, but now we see it starting to tick up, and that's because of this current candle. So there is potential also for this market to start trending up. The Tenkan-sen here is still pointing up fairly sharply, and as I've noted on many occasions, when we have solid upside momentum, that angle of the Tenkan-sen highlights the momentum in the market, and very often it tends to be the area of first support for this market. We can see here, when we have strong momentum situations, the Tenkan-sen acts as strong support, and we've had it in that case and for the previous 2 days trading. The market has tested down below, but the buyers have come back in, and that represents equilibrium in that fast term time frame and is quite significant. Now for tomorrow's trading, if we do see the market close down below that Tenkan-sen in a bearish manner, we could see the market trade off and test down to 80.22 and then potentially down to 79.52. But let's not preempt the market. We are more likely to see the market rally and change trend because of the reversal pattern that we're seeing here, or potential reversal, and perhaps see the market test to higher levels.